Okay guys, so welcome back to the Ultimate Forex Academy. In today's video, we're going to be taking a look at what is a BC and a CB. So, the terms BC and CB are just fancy words used to describe a bullish and a bearish fair value gap respectively. So, in the following, you can see that we have some fair value gaps that are shown here. And if you take a look at the left side, you can see that we have bearish candles forming a fair value gap. So this type of fair value gap, we call it a CB. So this is known as a CB, which stands for sell side imbalance, buy side inefficiency. And what we would expect here, we would expect that when price taps our fair value gap, we would expect this area to act as an area of support or resistance. So we would expect price to tap our CB and then react off it. Hence, we can use this in order to enter trades, or you can use this in order to as areas of support and resistance on price. And on the left side, you can also see that we have green candles forming a fair value gap. And this type of fair value gap is known as a BC, which stands for buy side imbalance, sell side inefficiency. And just likewise, would also expect price to react from this fair value gap whenever price taps within a fair value gap. So that's what a BC and a CB is. So now I want to show you how you can able to use BCs and CBs, in other words, bullish and bearish fair value gaps within the market when taking trades. So the following is going to be an example of how you can actually use this within live price action. So I'm not only talking about stuff that you can not use. I'm actually talking about real stuff that happens within the market as an ICT trader or as an SMC trader that you can actually use. So let's take a look at the trade execution or just the trade setup that I found on Bitcoin. Okay, so the purpose I took this setup, the purpose I showed you the setup is because I wanted to show you how price reacted from that bearish fair value gap. In other words, that CB. So sometimes price reacts off the zones and they are perfect areas to take trades from, just as I was showing you. For example, in this Bitcoin example, if you were to take a trade from this BC right here, The perfect place in order for you to put your take profit would have been this low, meaning this low right here. So this will be your first take profit. Hence, this being your first take profit, that's where anyone would have taken out their trade, right? And the second part where you could have taken your second take profit would be down here. So I had anticipated this move. This was a micro buyer setup. We'll talk in the future of what a micro buyer setup is. But for in this video, I just want you to know that sometimes BCs and CBs can act as very good support and resistant areas, just as I showed you within the following. Hence, as you can see, as price continued to distribute lower, price also created other CBs. As you can see here, price created a CB. Okay, so here we are on the chart, and let's try to figure out and identify some CBs and BCs that have acted as support or resistance areas. For example, here I can identify this CB. Hence, look at how this CB, uh, look at how after price created the CB, look at how price taps within it and then drops. And look at how price rejects this zone as price redistributes towards the downside. Hence, if you actually, and here you can also see another one. We have a fair value gap, price taps within the fair value gaps, and then redistributes price. And then the algorithm redistributes price lower, hence price is redistributed lower. Here you can also see another CB created, price taps within it. Actually, price taps within it twice and then drops lower. And if you can also see here we have a BC. So if you can see this BC, price rallies up, goes down, taps within the BC, and look at how price reacts from our BC before it then drops lower, you know. And if you can actually uh, you know, go into your own charts and see, you can actually see there's some fair value gaps that the market do respect, and then that the market taps within. For example, you can see the market taps within this fair value gap before filling it in. So yeah, so fair value gaps are very important as a trader because you can use this in order to enter into your trades. This is not supply and demand. This is a total different thing than supply and demand. You can actually use this with the right model. With the right model, you can actually use this to enter in and out of trades. So yeah, so guys, if you enjoyed this video, please may you like and subscribe, and don't forget to leave a comment down below. Without being stay ultimate and safe trading.